In today's video, I'm going to share with you how I'm buying the new Yieldmax funds that launched. Meta, ticker symbol FBY, and Google, GOOY. I'm going to share with you how I'm buying these Yieldmax funds without taking the risk as the market approaches all-time highs again. We also don't want to add to our margin debt and increase debt there in an unnecessary way either. So I'll share with you how I'm buying these funds without raising my debt too much and without taking too much risk at market highs. Because as you know, I earn over $100,000 per year in dividends at this channel, and I get some of that from the margin that I use. For every $1 you put in your account, you get $4 of purchasing power. Everyone has this power granted to them. They just have to simply ask their brokerage for it, and they simply have to use it responsibly to get ahead, okay? You can't use too much margin. You have to use a fraction like I use. For every $1 you put in, you get $4, but this $1 million of purchasing power that you see here, I only use a fraction, and I'll share with you what I mean by that in 1 second. If you need any help understanding how I get this performance of being up over 44% for the year, email me for my e-guides at aikentod48@gmail.com. When you buy my e-guides, you get access to my Discord chat room where I alert you of the Cornerstone rights offering, which is the big deal at my channel, okay? I use margin and I use Cornerstone to get ahead, okay? Cornerstone, this is the rights offering channel. We also have daily portfolio recap, options, Yieldmax channels, protecting your portfolio. It goes on, really. The Discord chat room was created originally for Cornerstone, but now we've expanded to all these other channels within Discord as demand warranted it. So we're up again 44% for the year. The Dow's up 5, the SP is up 17, the Nasdaq's up 33. So we're beating all indexes on a year-to-date basis, and on a daily basis, we're up 1.03%, whereas the SP is at 1.09, the Nasdaq's at 1.9, the Dow's at 0.72. So we're beating all of the indexes on both a year-to-date basis and a daily basis, pretty much. And again, I get that from basically Cornerstone and using margin. I tie all of my investments to the indexes, and that's what Yieldmax has. It has a lot of funds that are tied, that are in the indexes. So if I buy these Yieldmax funds, I'm going to get more guaranteed performance as long as I keep the Yieldmax funds at the same allocation that they are in the S&P. So if Facebook is 2% of the S&P, I can only have 2% of FBY in my portfolio. I've made past videos on Yieldmax funds and how to allocate properly. And if you want to understand how Yieldmax gets these exorbitant yields exactly, see my past videos on these Yieldmax funds. So also, when you buy my e-guides, you get access to not only Discord, the Discord chat room, but you get my phone number to call me anytime at. I'll sit there and take as long as you need to walk you through your portfolio and set it up like mine, okay? You can call me anytime you need me. So, $8 price is the market price, by the way, really quick for Cornerstone, but we drip down here at 663, 652, 642. These are all monster gains. 25% gain. 642, 29% gain. 627, 33% gain. So we're getting the best of both worlds in my account. We're getting both days gains, as you can see from Cornerstone, this 2,500 and 900 from each of the Cornerstone funds. We're up over $3,000 in Cornerstone today alone. We get the 21% dividend drip down at NAV, like I just showed you, every month for those monster gains, for $1,000 gains. It's tied to the indexes. As you can see, it beat the indexes over a 10-year period. And that's why I have about 500 grand in Cornerstone. It is my account. This account size, 487, that's basically all Cornerstone. The rest of my account is margin, which, as you can see in my debt below here, my debt has grown. Well, it's at about 212,000. It's actually gone down a lot since you originally started watching this channel. I used to have 284 margin debt, but I've been working my margin debt down. So $225,000, I mean, in debt, that's nothing to me because it's low interest, and my dividends of over $100,000 per year pay back that debt in less than 2 years. So that's how I'm getting the performance, guys. I'm using a little bit of margin, just a fraction, just 200 grand of this $1 million purchasing power, which everyone gets. They all get 4 times purchasing power. I'm using a fraction of that, and I'm using Cornerstone to park most of my money in my account. That is the cornerstone of my account, no pun intended, okay? And then I'm just augmenting my positions and tweaking these major index positions, these heavily weighted index positions that I have. I'm tweaking them with Yieldmax funds. So as you can see, where else are we getting our performance today? ORC's up 4%. That's nice. we have over 30 grand in that fund. So that's where we're getting a lot of our performance. We have, CRF acts as the NASDAQ, CLM acts as the S&P, and OARC acts as the Russell 2000. So I'm just using all three indexes to get this performance, this superior performance, in my opinion. I can't find this kind of performance at other channels. So we added in FBY and GOOY today, FBY and GOOY, as you can see here below, okay? We added these in. We're already up on the Facebook position. We added 10,000 here. How did I make room for these funds? Okay, I sold Fangu. Okay, so I sold 7,500 Fangu for a gain. Okay, I also sold the Fangu short, the FangD short. So that's why I didn't get the full gain here, because I was down in my short. But still, we raised a lot of equity to do that. Since Fangu is 100% maintenance, okay, and I'm going to explain to you guys the power of maintenance using Yieldmax as an example. See, Yieldmax is 50% maintenance. As I show you here on the snapshots here, we go into the view margin maintenance requirement. Okay, you'll see Yieldmax funds are 50% maintenance. That means for every $1,000 I put into this fund, $500 of my money is taken up. Okay, so this available withdrawal number that I show you in 1 second, it's less affected by Cornerstone because that's 30% maintenance. So if we go to Cornerstone, I'll show you Cornerstone, CLM. That's why I park most of my money in this. SVOL, okay, I'll get back to that question on SVOL in 1 second. CLM, okay, look at the maintenance here. View margin maintenance requirement, 30%. So if I put 1,000 in Cornerstone, it only takes up $300 of my equity. If we go to Fangu, which I was just talking about, Fangu, FNGU, you're going to see it's having a monster update. It's up 8% today, okay? But look at the snapshot, okay? Look at the margin maintenance requirement. It's 100% maintenance. That means for every $1,000 I put in Fangu, it takes up 1,000 of my equity. And as you know, when I'm trying to live financially free out of my brokerage account, I can't have this equity number budge, okay? I don't like it to go to zero. When this number is at zero, I'm in a margin call. Now, it would take a huge market downturn to get me in a margin call. If we had a downturn in 30%, if we had a 30% downturn in a month, I would be in a call, but that wouldn't really happen because I keep short options on at all times. So if it was a 30% drawdown within a year, see these options here, they'll protect me in a market drawdown. I'm also going to add to these at the end of the day just to rebalance, okay? So if we had a 30% correction in 1 month, I would be right at a margin call, because if you add in 487 plus my debt of 200,000, so we'll just make that, call that 700,000. So 10% on 700,000, 70. 20% would be 140,000. 30% would be about 210,000, and that's where I'm at. I'd be right near a margin call if we had a 30% market decline in 1 month. But then my put options would really clean up, because a 30% drop in 1 month is unheard of, and my put options would probably make more than I lost in that time period. Okay, that's what I keep put options on, is for ultimate flash crash insurance. These put options right here, which again I'm going to add to at the end of the video, at the end of the day, and I'm going to update that move in Discord tonight. So I keep the puts on for monthly insurance just in case there's a crash. But then I don't, and then if it's a 30% drawdown over the course of a year, I don't worry about it, because we get paid 20% dividends. So if we had a 20% drop over the course of a year, we would break even by the end of the year, because we received 20% in dividends from Cornerstone and the rest of my funds. So I'm not worried about a 30% drawdown over a month's time frame, because I have my options over a year or over a year's time frame, because the dividends pay back the losses. That's what's so great about passive income investing and dividend investing, okay? Even using margin, okay? People think margin is taboo, but when you only use a fraction of it to get this extra income and performance, and then you pay back the margin in a little under 2 years, then all the assets become yours and there is no risk, okay? And then these assets just pay you monthly cash flow for life. Qualifying bank, with monthly cash flow acts as qualifying income to banks for life, okay? Which then gives you more loans and you can level up your account faster, okay? Day trading does not give you those gains, okay? So that's what I did, guys, okay? I sold Fangu, which I really regret doing, to make way for these Yieldmax funds. That way, I raised 100% equity back by selling Fangu. I lowered a lot of risk, since Fangu is a triple. The market's melting up near the highs here. I lowered a lot of risk by selling Fangu, and I just replaced it with Yieldmax funds. And by the way, that's a good idea right here, I feel. When the market's at the highs, that's when you sell covered calls, and that's what Yieldmax funds do. They basically sell covered calls, synthetic calls. So I still wanted to get my performance, though, back from Fangu, because after all, we had Fangu to help boost performance in Yieldmax because most of the Yieldmax funds are in Fangu, okay? And so if Fangu is gone, how am I going to get that performance back from Yieldmax? Because the Yieldmax, the upside is capped on the covered calls, as you know. Again, go see my past videos on Yieldmax if you need to understand how these vehicles work. So if the upside is capped on these covered call funds, and you can still make some money in these funds like Tesla, we're still up 15% in our cost position, but it's nothing like the stock. The stock has moved up way more since we've been in Tesla, but we're collecting a 70% dividend, so I can't complain. This 70% dividend plus 15% makes you almost up 100% for the year. So you're still getting great performance out of Yieldmax funds, but you're still capping your upside nonetheless. That's what Fangu replaced. So if I sold Fangu, how did I replace it today? I bought Netflix. Okay, Netflix is in Fangu, and also Netflix is pretty low maintenance, and it just had a pullback off the highs. Okay, so Netflix, we were here at the highs. We were formerly at around $600. Okay, in Netflix, as you can see here. Okay, above 600. So we're way off the highs, and on a 1-year chart, you'll see that we pulled back to a decent place, a decent entry point in Netflix. Okay, check this out. As I reload this screen, you'll see 1-year chart. You'll see here that we pull back to the 50-day moving average. Okay, that's a significant entry point here. Okay, 50-day moving average. Okay, this purple line. Okay, so 50-day moving average, purple line. Plus, we got a tag of the RSI at around 40, which is near the oversold level. Every time the RSI hits 40, you see an ensuing bounce in the stock itself. So if you need help understanding technical indicators and how I read charts, that's again in my e-guides. I have volume 1, fundamental analysis, volume 2, technical analysis, volume 3, how to live financially free out of your brokerage account using margin, and volume 4 is how to play Cornerstone, which my Discord community alerts you of the rights offering in. So that's really the whole thing you have to do with Cornerstone, time it around the rights offering, ask for the special drip. Okay, and then for everything else that we're doing, we're just using margin, which I have channels on Discord as well for margin if you ever have questions on margin. And you can also just call me anytime because you have my phone number. So that's how I replaced the lost performance in Fangu. And to get that lost performance out of the Yieldmax funds is through buying 800 of Netflix, because Netflix is still cheap and has low maintenance. And I bought some IPO. Okay, that's the last thing I did today, guys. I bought 800 IPO because Snowflake is in IPO. And Snowflake was in Fangu. So I'm trying to get back all my Fangu exposure. Most of the Yieldmax funds are in Fangu. So I have most of those names now. We have AMZ, Facebook, Tesla, Google, Apple. So we have a lot of those Fangu names in here now. And then I just bought Netflix on the side and IPO on the side. IPO is one of my favorite funds too because it's way off the highs, as you can see here. IPO, okay, I bought $800 of IPO. Okay, and you'll see that it's way off the highs. It was formerly at 70. Now it's still at 35. And it's moving up with OR because this is how I get my small cap and mid cap exposure. So the best part about IPO is you would think it's risky with the high growth that it has. But if you look at the maintenance, you'll see that it's only 30%. So it's one of my secret go-tos. And I'm going to sell puts on IPO as the market falls. If and when the market falls, I'll be selling more puts on IPO like I used to do. And that will lower my margin even further and increase performance out of these Yieldmax funds. And it'll just give me growth, more growth. But again, cheap growth, low maintenance growth, okay? Because we can't be adding the growth at the market high. So that'll do it for the video, guys, okay? This debt number that you see here will be worked off in less than 2 years. All these dividend-paying assets will be left to me for life, including these Yieldmax funds. I'm buying only a certain amount of Yieldmax funds. Okay, I'm not going to overweight them to where they're out of weight in my portfolio. And, you have to watch the indexes and match them to the indexes. If it's 2% Facebook in the S&P, then you need to have 2% in your account. People ask me all the time, why not just go all Yieldmax? Why not stay away from Cornerstone and go all Yieldmax? Well, because they have headline risk. One day the market could fall, or they could have an earnings announcement and they'll fall way bigger than the indexes themselves. So to get the most performance out of your account long term, you want to stay with the indexes. And if you're in margin, you especially want to use the indexes because your drawdowns are limited to the amount of the index drawdowns, which is way less than an individual stock. So that's how I'm doing it, guys. If you need any help on how I'm doing this out of my account, again, email me for my e-guides at akintodd48@gmail.com. And if you have any questions, leave them in the comment section below. Also, if you have any other ways to increase performance out of our account, cheap performance with low maintenance names that are way off the highs that can possibly boost our Yieldmax positions, please let me know of those in the comment section below. And I'll see you on Discord later tonight. Thanks.